Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Reyna, Head of Thematic and Specialty Product Strategy, ETFs and Index Strategies at Invesco. He joins us for National Biotechnology Month to discuss why investors consider investing in biotechnology now. Rene, it's great to see you again. Welcome back to Trade Talks.
Yeah, likewise, Jill. Thank you.
You got it. In 2021 was a challenging year for biotech. So why should investors consider investing in biotechnology now?
Yeah, no. So look, I mean, we saw, definitely a challenging 2021, at least in the second half. We saw biotech or the MBI index peak around August. We saw broad sort of selling pressure across the space that's continued really throughout, the first part of 2022. And I think some of it, makes sense. I think we saw, this environment where a lot of these small cap biotech companies were in this favorable low rate environment. We saw investors bid up prices, searching for that next big sort of COVID solution. And, we fast forward to where we're at today, and, perhaps valuations did get a little overstretched. The environment is much different. I think with the rate environment, smaller firms are starting to experience some of the pressure due to this interest rate environment, their cost of capital increasing as yields rise. I do think it's important as well, though, to recognize, some of the larger cap names like the Amgens, the Gileads, Regenerons, they have fared much better. So a little bit of sort of a barbell if we look at sort of the biotech space. Now, it's hard to pick the bottom. I do think there's optimism. And, what I look at today is, a couple of things. So one, I think current valuations look attractive. I think there continues to be the strong pace of scientific and medical advancements. During the pandemic, we saw a lot of delayed spending. So that should, perhaps normalize here in 2022. And then M&A activity may also pick up. So in the near term, there's where some of the optimism is. I think for investors, just remember that over the long term, biotech investing has been a good space. And if we look back, we see strong annualized returns, and we continue to see a strong number of IPOs coming to the marketplace.
Your biotech ETF tracks the Nasdaq Biotech Index, a flagship index, which recently went through an index reconstitution. Can you discuss the methodology and how the index has evolved over time?
Yeah, so I think the one thing that stands out about the Nasdaq Biotechnology Index is it's pretty investor friendly. It's straightforward. It's transparent in terms of the way the methodology works, and arguably it can be described as the true sort of biotechnology benchmark. And so I think the first part is the classification. So to be included in the universe, the company has to be classified by ICB as a biotechnology or pharmaceutical company. And so I think what we see in the sort of biotech space is companies that start off as sort of these R&D intensive smaller companies. They grow, they mature, they transfer into sort of more pharmaceuticals. And by using both sectors to get exposure, industries to get exposure, you do pick up, some of these truer pure play biotechs. You get some of these sort of biotech adjacent in these now sort of pure play pharmaceuticals, and you really get some nice balance. So that's the first part. There's no geographical requirement, so we can't have non-US companies in the portfolio for more diversification. And then size and liquidity is factored in. I think the last component, and one of sort of the positive attributes of the index itself, is the weighting methodology. So it's a modified market cap weight. Constituents, they're capped at 8%. And that's for the top 5. And then the remaining have a 4% cap, and then it's sort of market cap weighted from that point forward. And so you end up with this nice balance, a portfolio of some of your higher market cap or larger, higher quality companies in the biotech space. And then you get some of these smaller exposure companies in the way that the methodology sort of works. And so a really nice balance for the portfolio. From our ETF at Invesco, it tracks under the ticker IBBQ. Our ETF, which tracks and replicates the index, was launched last year. However, for investors, keep in mind the track record of the underlying index goes back to November of 1993. We own and replicate all 373 names, and the index, as well as our fund, rebalances quarterly and reconstitutes annually in December. If we look at this most recent reconstitution, it was interesting to see how many new names qualified for the universe. I think it speaks to the continued growth we see. The basket swelled up to 373 names. So it was a record year in terms of new entrants. 129 new components were added to the index. So although it's a passive strategy, rules-based, you can see there were some active elements, if you will, that get you nice exposure to the space.
And Rene, what differentiates IBBQ from other biotech strategies that are available?
Yeah, so I think it's three things. Track record, again, the index itself goes back to 1993. That's what we're tracking with our ETF. The selection universe, so the ability to not only capture pure sort of biotechnology companies, but because of the inclusion of these pharmaceuticals, you also get some of those biotech companies that are transitioning to pharmaceuticals. You still retain them in the portfolio. So I think that's unique. And then our weighting methodology, that sort of modified market cap weighting, allows you to sort of continue to maintain some meaningful exposure to some of these larger cap names within the space, while still getting that balance of the small cap. And I think the last thing, which I have not pointed out yet, is the cost. IBBQ is offered at 19 basis points. So it's over 50% cheaper than some of the largest biotech funds that exist today.
And finally, how does the Invesco Nasdaq Biotechnology ETF fit in investor portfolios?
Yeah, so IBBQ is, I would say, it generally fits in a equity growth sleeve of portfolio. Some investors are starting to incorporate more sort of thematics or theme-based. I think for investors looking to express exposure to this theme, we would generally see investors consider IBBQ as sort of a complement to a core portfolio, so sort of like a sleeve, if you will, satellite position, generally less than 10%. And I know there's sometimes this grow in terms of, core plus explorer approach. And so really sort of like a satellite position to core equity growth is where we see this strategy fitting.
All right, Rene, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.